Okay, everybody, we're a couple of minutes in. I figure we might want to go ahead and get started now. My name is Kirk Ashey, and Matt Worsham and I are partners with Shepard Walton Employee Benefits, and we have been tasked with facilitating and organizing this Zoom call today. What we're talking about today is the PPP loan and updated guidance and the loan forgiveness provisions, which, as we know, this has just been a moving target. So we were going to address this, and we couldn't think of a better partner to do that with than vcfo. Also local to these areas, virtual CFO is exactly what they sound like. They have expertise in finance, accounting, and human resources, and as such have found themselves in the middle of dozens of these loans executing on for their clients, upwards of 40 loans at this point, I think close to or even surpassing $20 million. So we feel like they're the perfect partner for us, not to mention a client of ours and a fantastic relationship. And their expertise is everything that they're doing with the PPP loan is happening in real time. So we feel very confident putting y'all in front of everybody on this call. So really with that, we're going to turn it over to vcfo, and we'll have plenty of time for questions and everything else after. So with that, we'll let you guys take it away. Thank you again, everybody, for your time.
Good afternoon, everybody. My name is Russell Naisbitt. I'm the Houston Practice Manager for vcfo, and I'd just like to thank Kirk and Matt and Shepard and Walton for giving this opportunity to present to you today on the PPP loan program, and especially with a focus on ensuring that you maximize the amount of the loan that is available to be forgiven. As Kirk mentioned, vcfo is proud to be a Shepard and Walton client of many, many years. And I'd like to welcome all of their other clients to this call today as our guests. I would advise that a recording of this call together with this PDF of the slides will be available. Before I introduce our team, I would like to draw your attention to the Q&A button at the bottom of the screen. As we go through the presentation and as questions arise, please feel free to use that Q&A feature to post your questions. Do not post them in the chat. Use the Q&A. We've allowed plenty of time at the end of this call to answer those questions, and if we don't get to all of them, then we will be available to follow up via email at a later time. Our plan today is for the presentation itself to last 30 minutes or perhaps a little more than that, and we're intending to have you all out of here on or before the schedule close at 3 o'clock. Plenty of time to get situated to watch the SpaceX launch for those of you who are interested in that. So I'd now like to introduce, or actually I'm going to have them introduce themselves, the rest of our team. First of all, Jennifer, would you introduce yourself?
Thank you, Russell. Hi, everybody. My name is Jennifer Lennarz. I'm a consulting CFO with the Austin office of vcfo. I have about 25 years experience as a finance executive here in Austin. I was chief financial officer for 3 technology startups here, so I have a specialization in technology. I've been involved with the PPP program since it first came out. So hopefully I should be able to answer any of your questions today. And Chris?
Good afternoon, everyone. My name is Chris Hysinger. I'm a consulting CFO here in the Houston office. I have about 20 years experience in the financial world, primarily with midstream and upstream oil and gas, though I've also worked with or serviced clients in technology, light manufacturing, and retail. And I'll be the one providing the presentation today. So with that, let's get started. So we're going to talk about a few topics today. Some of this will probably not be new. I'm assuming everyone on the call has probably gotten a PPP loan, so there's some familiarity with the program. But just in case, I'll give a brief overview and focus on economic necessity. There's been a lot of discussion about that. I think it's worth revisiting. And then we'll talk about what you can and can't use the money for. I'll then move on to a very simple example calculation that is based on the latest forgiveness guidance that will help illustrate the method with which forgiveness is calculated, and also provide some insight into ways to maximize that forgiveness. And then finally, I'll end with what happens to the unforgiven amount. So as I'm sure you all know, the PPP program was established under the CARES Act in late March of 2020. It's administered through banks and other financial institutions, and is available to qualifying small businesses in the form of a loan. The loans come with quite a few restrictions, and the intent of the CARES Act was to provide support for the retention of employees and to help businesses survive the current situation we're in. As an incentive, the loan may be partially or entirely forgiven if certain criteria are met. So when the loans were first issued, there was a lot of discussion around economic necessity. And I'm sure you saw some news articles about some fairly high profile companies that received sizable loans and ended up giving them back because the government questioned the economic necessity of their receiving it. So as a business, everyone should be asking, or should have asked, why is this loan necessary? The pandemic, the bottom line is if it created an adverse impact on your business, it probably is necessary. And that could be a reduction in revenue, an inability to ship or receive orders and material, the need to completely shut down the operation for a period of time, or not receiving timely payment from customers. If any of those occurred, and there's a host of others, you are likely able to demonstrate this need. Though when considering necessity, it's important to consider other dimensions like the size of the loan you received, and are the impacts to your liquidity or your business visible and demonstrable. Because of all the concern over economic necessity, the SBA did revise their guidance, or I should say provided some guidance around economic necessity. Loans over $2 million will be audited by the SBA. Don't know how quickly they'll get to it, but they have stated that all loans over $2 million will receive an SBA audit. And that will include an audit testing economic necessity. Loans under $2 million, while are still subject to an audit around use and fraud and things like that, are assumed to meet the requirement that the loan is necessary. So for the majority of borrowers who probably received under $2 million, you don't need to worry about being able to demonstrate necessity, but it's still a good idea to document it. In general, all companies should document the rationale regarding the reason for the loan and the use of funds and your application for forgiveness. It may seem obvious now why you ask for the loan and how you're using the money, but there's a lot of loans out there, and if you get audited, it may be 5 years from now before they come knocking, and you want to be sure you're able to reflect that understanding today at some point in the future. This is an evolving process. The latest guidance was issued after hours on May 22nd. It answered a lot of questions that came with the forgiveness application. More guidance will likely be forthcoming. There are articles almost every day about changes that are being discussed among the members of Congress regarding things like the term of the loan and how it applies to certain businesses, and taxability of the forgiveness and the expenses, and those will likely be sorted out in the coming weeks. So this is current as of now, but I would expect and be prepared for it to change. Before we go into some of the key features of the PPP program, let's talk about some important dates. The most important date is the loan disbursement date. This is defined as the date that the money is deposited in your bank account. And it sets the start point of your covered period. It sets the date upon which you must ask for forgiveness, and is very important in terms of when you record expenses, and being sure you get your application for forgiveness in on time. We recommend that you verify these dates or your understanding of these dates in writing with your bank so that there's no confusion. The worst thing that could happen is you miss the end of your covered period by a day and aren't able to include a significant expense in your forgiveness calculation. There's several other dates and time periods that are important. These primarily revolve around look-back periods for the calculation of FTEs and payroll, so that you can determine if you're eligible for safe harbors, or whether or not you increase or decrease headcount or payroll. And they're all spelled out pretty clearly. I won't go into too much detail regarding them, but they are used as part of the data gathering exercise in determining what can be forgiven. The only other really important date that isn't just a look back is the date June 30th, 2020. This is the date, if you're going to claim any of the safe harbors, that you have to have restored either employee wage rates or FTEs. So if you intend to restore or hire back employees, you want to do it on or before June 30th. Now let's talk about a few of the changes that came out with the forgiveness application. So currently, the forgiven amounts may include either incurred or paid expenses during the 8-week period. Previously, the guidance said that it only included paid expenses, but I think there was enough hand-wringing around that they changed it to include incurred expenses. So for instance, if you have a utility bill that you pay on the 15th and your covered period ends on the 30th of that month, you can include the 15 days between when you paid your bill and the end of your covered period in your calculation of allowable expenses, even though you aren't going to pay that utility bill till 15 days after the end of your covered period. The requirement here is if you do use incurred expenses, you must pay the amount prior or on the next regular due date. So you can't pay expenses, you can't prepay expenses, but you can pay incurred expenses provided they're paid by the standard due date. There's also some limited flexibility around when your 8-week period starts. If you're a weekly or bi-weekly payroll payer, you can choose to have the covered period start on the first day of your pay period following the disbursement date. So that gives you, the intent there is to prevent people from having to rearrange your payroll schedule to maximize forgiveness. I think the incurred expenses part actually covers that, but this is a kind of a belt and suspenders approach to providing that flexibility. Loan proceeds must still be used for allowable expenses only, and we'll get to that in a minute. And no more than 25% of the loan forgiveness amount may be attributable to non-payroll costs. And these costs really fall into 3 buckets, which is rent, mortgage interest, and utilities. So you can use the PPP proceeds for payroll costs, including paid leave and employer-paid health and retirement contributions. You can use it for state and local taxes, but not federal taxes. You can use it for bonuses, commissions, tips, anything that is a regular payroll item. And they're really pretty open on what they consider a regular payroll item, at least for employees. You can use the proceeds for interest on mortgage obligations for business and real or personal property incurred before February 15th. Notice it says mortgage, so unsecured debts generally do not qualify. But if you have a mortgage that you had in existence prior to Feb 15, you should be good to include that interest. Similarly, rent under lease agreements enforced before February 15th can be an approved expense. The guidance is silent on whether if rent includes common area maintenance or taxes, whether that needs to be excluded. I suspect future guidance will be coming out around that, but at this point, it doesn't say that those can or can't be counted. Finally, utilities for which you had service on or before February 15th can be included. These include gas, electricity, water, phone, internet, and a somewhat mysterious category called transportation. No one is entirely clear what transportation means, but the general thinking among accountants I've talked with is that it is fuel for company vehicles. So along with the list of approved proceeds is what you shouldn't use it for. Independent contractors or any employee who does not reside in the United States. Those are not allowed to be paid under this program. I should say you're not allowed to count them towards your forgiveness. Also, any compensation to an individual in excess of $100,000 is capped at $100,000. So it doesn't say you can't pay people more than $100,000, but you can only claim $100,000 on an annual basis toward the forgiveness calculation. As I mentioned before, you cannot include the employer portion of federal employment taxes or Social Security taxes in the forgiveness, and you cannot include qualified sick or family leave wages that were established under the Families First Coronavirus Response Act. You probably know that there are other mechanisms for you to recoup those expenses, and they're not to be counted toward forgiveness under this program. Finally, mortgage interest prepayments and principal payments cannot be counted for forgiveness, and generally prepayments of any kind, with the exception of the incurred expenses calculation, can be counted. So some additional considerations now that you have a PPP loan. If you received a PPP loan under the CARES Act, you are not eligible to take the deferments of payroll tax payments, nor are you eligible to take the employee retention credits under the CARES Act. It's important that you follow the SBA guidance precisely on the use of funds to avoid significant penalties. And the IRS has said that the forgiven amount, while it will not be considered debt cancellation for income tax, the expenses are non-deductible, which seems to kind of arrive at the same conclusion as if it was taxable. There is a lot of talk in Congress about changing this, and that was not the intent of the act, to make it taxable. And I suspect that if the parties can come together, this will be changed at some point over the course of the next year, or the end of this tax year, so that we can deduct both. But as of now, we need to treat those expenses as non-deductible. Finally, if you also received an EIDL advance as part of the Economic Injury Disaster Loan Program, that will be deducted from your forgiven amount. Key point here, though, is when you request forgiveness, you do not want to deduct that EIDL advance from the amount you're requesting. The SBA has stated that they will deduct the EIDL amount themselves after they receive your request for forgiveness. So to maximize loan forgiveness, there are really 3 hurdles that need to be met. First, during your covered period, that 8-week period that begins on or about the day you receive the loan funds, you must pay your employees at a minimum of 75% of the rate you were paying them during the respective test period, the look-back period. Note that this is not calculated based on the employee's total compensation. It's based on the relevant pay rate. So for an hourly employee, it would be based on their base hourly rate. For a salaried employee, it would be based on their base salary, without regard for commissions or bonuses or tips. You also need to maintain your average FTE levels during the loan period. They must be at least as high as during the relevant test period. And we'll get into how that calculation is performed in a bit. Finally, at least 75% of the forgiveness amount must be used for approved payroll expenses. Now, if you did reduce payroll or FTEs, there are 2 safe harbors. Both of these safe harbors require you to restore either your FTE levels or your average annual wages to the levels they were on February 15th prior to June 30th, 2020. So for the FTE, you have to restore the FTE levels to your February 15th levels by June 30, and that isn't calculated on a company-wide basis. So there's no partial credit with restoring FTEs. You either restored all the FTEs to that level or you restored none of them. Conversely, on the pay rate safe harbor, you can do it on an employee-by-employee basis. So if you reduce some employees, you reduce their pay, and you restore it by the 30th, you will get a safe harbor for those individual employees, even if you didn't increase pay for other classes of employees. One of the interesting features of this safe harbor calculation is that it only is available if the reductions in either pay or FTE occurred between February 15th and April 26th. This means that if you reduce the employee pay or FTE after April 26th, you are not eligible for the safe harbor. That seems a bit odd. I could see that maybe being changed in the future, but as of now, that's what the guidance states. And again, I just want to reiterate that 25% of the forgiven amount, only 25% can be used for non-payroll expenses. So let's go through a quick example. This will illustrate both the FTE and the payroll reduction calculation. For this example, we're going to choose a very simple firm. It's going to have 2 employees, both of whom are full-time. One will make $20 an hour and the other makes $65,000 per year. Eligible non-payroll expenses for the 8-week period are $8,000, I'm sorry, approximately $4,000 per month. And the average FTE during the look-back period is 2. There's 2 employees, both work full-time. No matter which FTE calculation method you use, the average is 2. This company received a $25,000 loan. We're going to look at 3 different cases. First, we're going to look at the case where there was no change made to either hours or pay during the 8 weeks. The second case, we'll consider the hourly employee having his or her pay reduced by half, his or her hours reduced by half during the covered period. And in the third example, both employees will have their pay cut by 33%. So in scenario 1, total compensation during the 8-week period is $16,400. Total non-payroll is $8,000. There's no salary wage reduction adjustment or FTE reduction adjustment. We'll talk about those in a minute. And the sum of those 2 values, total comp and non-payroll, result in a modified total of $24,400. This is the language straight off the application, by the way. The PPP loan amount was $25,000. And now we need to calculate something called the payroll cost 75% requirement. This is to see if you fulfill the need to spend 75% of the forgiveness amount on payroll. So to calculate this, you take the total comp, divide by 0.75, and you arrive at $21,867. The minimum of the 3 totals, modified total, PPP loan amount, and payroll cost requirement is the amount forgiven. So in this case, the requirement that you spend 75% on payroll is what's capping your forgiveness at about $22,000. Now let's look at scenario 2, where we have a reduction in employee hours. Again, the hourly employee had their hours reduced by half, so from 40 hours to 20 hours. In this case, the total comp is $13,200. Non-payroll expenses are the same. Still no salary wage reduction because we didn't reduce the hourly rate of that employee, but now we have this FTE reduction quotient. And to determine that, you take the average FTE for the company over the 8-week period, which in this case is 1.5, and you divide it by the average FTE during whichever look-back period you chose. So that's 0.75 in this case. You multiply that amount, 0.75, by the sum of compensation and non-payroll expense, and that results in about $16,000, $15,900. Again, you have the PPP loan amount and then the payroll cost requirement, which is based on the new total comp in this case of $13,200, and you result in a forgiveness amount of $15,900. This particular forgiveness amount is being driven by the fact that employee hours were reduced rather than the 75% cost requirement. So this illustrates how reduction in payroll or reduction in employee hours or headcount can reduce your forgiveness. So in the third example, we have a reduction in employee pay. Both employees receive a 33% pay cut. That means the hourly employee goes down to $13.40 an hour, and the salaried employee has an annualized salary equivalent to $43,500. Over 8 weeks, this is about $11,000 in total comp. The average FTE is still 2, and we still have our $8,000 in non-payroll expense. So to determine the total salary wage reduction adjustment, you take either the new hourly rate or the new salary, and first determine that it's below 75%, that the rates fell by more than 75%. In this case, they fell by 67%. And you calculate the wage reduction. And to calculate this wage reduction, you take the old hourly rate, which was 20, multiplied by 75%, and then subtract the hourly rate during the covered period. So in this case, the wage reduction calculation is based on a value of $1.60. Similarly, with the salaried employee, the wage reduction calculation is based on an annual salary reduction of $5,200. Then to calculate the wage reduction adjustment, you take either the hourly rate or the annual salary reduction and multiply it to determine what the reduction is during the 8-week period. So the total in this case is $1,312. You take, to calculate the modified total, you take the total comp, the total non-payroll, and subtract the wage reduction adjustment. And then compare it to the PPP loan amount and your 75% cost requirement to get your forgiven amount. So in this case, even though you had a 33% decrease in wages, your forgiven amount is still driven by the requirement that 75% be paid to payroll. And you may have noticed in both these calculations that both the reduction quotient and the payroll cost adjustment are, I'm sorry, the FTE reduction quotient and the salary wage reduction are applied to the total comp and non-payroll expenses added together. So the more valid non-payroll expenses you can include in your non-payroll expense number, the less impact that either of these calculations will have on your forgiveness amount. There's no way of avoiding the fact that reducing comp is going to reduce your forgiveness, but you can minimize that effect by including as many non-payroll expenses as you can. So after you've determined your forgiveness amount, you'll likely have a portion that is not forgiven. This amount converts to a 24-month term loan that starts from the date of the disbursement. You don't have to make any payments for the first 6 months following the disbursement date, and the interest rate is capped at 1%. It's important to keep in mind, though, that even after conversion, proceeds must still be used for approved expenses only. So it's important that you continue to keep track of how you spend that money, so if and when you do get audited, you can verify that you didn't use it for an unapproved purpose. Now finally, let's talk about the documents that are going to be required to be submitted per the SBA. Your bank is actually going to be the one handling the forgiveness process, so they may have different or additional requirements, but this is what the SBA says to expect to be required. First, obviously, any payroll documentation that you use to verify cash compensation and non-cash benefit payments during the covered period. This could include payroll reports from your payroll provider, bank statements, tax forms that overlap the covered period, particularly if you're claiming sizable state taxes, payment receipts or account statements to show that you made the required distributions to the employee benefit plans or paid for employer portion of health insurance. You want to keep time records to verify FTEs during the period between February 15th and June 30th, and also during the period Jan and Feb of 2020, in addition to the look-back periods that are used in the calculation. For non-payroll expenses, you'll want to include a copy of all your utility invoices and receipts, canceled checks, lease payments, and copies of leases to verify how the money was spent and that you had a contract in place prior to February 15th. And there's probably going to be a host of documentation you want to keep besides the required documentation, including your justification for asking for the loan, just in case you need it in the future. So I hope you've enjoyed this brief presentation about the PPP loan forgiveness program. We have a whole team here in Houston that's ready to help. Should you have any questions or needs around this or other financial issues. And I I'd like to remind everybody, if you have questions, please enter them into the Q&A box and we will open the floor for questions. Thank you.
Thank you, Chris. So I will start with one of the questions that we've received. And the question is, if we had to use our 940 and 941 yearly totals, and it looks like our employee numbers are high, but we only have a very small amount of salaried full-time employees, can we just use that number of salaried who we kept on without laying them off? Will the forgiveness be for all of our payroll that we paid out, or if we are varied hours only? So that's a lot of questions into one question. The thing to remember when you look at payroll and people in the PPP forgiveness process, and when you look at the forgiveness application, is it is employee based. So your 940s and your 941s, they're only support for your numbers. You actually have to list out each individual employee, and you're going to have to do a calculation as to whether that employee is counted as one employee, half an employee, or some fraction in between. Remember, there's two different methodologies you can use. We recommend modeling both of them, using those to make a determination, but changes in hours can definitely have an impact, but you have to look at it on an individual basis. Russell, would you like to take a question?
Sure. So this one is, I have two people who are on unpaid FMLA for the entire covered period. They received wages during the reference period, which was Q1 of 2020. Can I treat them for FTE calc as voluntarily reduced hours? And is there a way to not get a hit for the associated reduction in wages? So I'm going to take a first pass at answering this one, and then I'm going to defer to Chris or Jennifer to add any color to my my response. But so I think the answer to your question is that I think that you can, yes, treat them as voluntarily reduced hours. And as far as the associated reduction in wages goes, I think there's a potential to be able to remedy that perhaps under the safe harbor, which if the reduction in wages is restored prior to the June 30th reference date there, then I think that you won't get a hit for the associated reduction in wages. But Chris, is there anything you'd like to add to that?
Well, I'd say that, they don't want to double ding you for reducing hours and wages. So if they were receiving, say, 60% under the long-term medical leave, then you can, that either is going to figure into your FTE calc if you consider it 60% fewer hours, or your wage calc if you figure it's going to be a reduction in base pay. It shouldn't be counted as both. I do think that Russell's right. If you can meet the safe harbor, then that will probably solve your issue. But I also think that you would be able to exclude them from the calculation, because it's not a situation where you furloughed them because of your economic situation. It's a situation where they asked to have reduced hours or to go on paid leave because of their own personal or medical circumstance.
Yeah, I think it's important to remember that there are these exceptions to the FTE count, such as somebody resigns, somebody's terminated from cause, somebody requests a reduction in hours. A leave, I would consider a requested reduction in hours. Okay, I'll take the next one. The next one we have here is, as a home builder, do you think non-payroll costs associated with model home operations and construction trailers should be included? I haven't come across this one. To the degree they are a qualified expense, for example, utilities. Yes, I would think utilities. If you are renting a construction trailer, yes, rent on a construction trailer. I think those things should be able to be included. To the degree that's expenses that fall out of those specifically included ones, you know, utilities, transportation, etc., I don't think you'd be able to include them. Okay, Russell?
Okay, so the next one is, does internet access, which you'll recall was included under the definition of utilities, include communication tools like Zoom, etc.? So the first point I would make is that a lot of these definitions are still a little bit fuzzy, and we're expecting that over the next few weeks that further clarifications will be issued. My inclination at this point would be to say that communication tools such as Zoom probably do not qualify, but again, I would defer to my colleagues to see if they have read or seen anything that might add further color on that.
Well, I'll take a stab at that. The guidance does not specifically exclude it, but they're pretty specific about what is included. And they do say that internet access is a utility. My guess and my recommendation is that software you purchase to facilitate that communication is not considered a utility.
Yeah. Okay. Next question. Can we pay bonuses and include in forgiveness requests as long as we don't exceed $100,000? Yes. They have specifically come out and said bonuses can be included to the degree they do not exceed the cap of $100,000 or $15,385 over the 8-week period. I will throw in one caveat here, and that's document what the bonus is for, because there is a certification that you must sign as part of the forgiveness application. And one of those statements in there says that money used for payroll was to retain employees. So, you know, you can't just, I wouldn't arbitrarily do a bonus, but if it's to retain employees, yeah, absolutely, you can include it.
One other comment I'd make there, they say that owner employees, so if you are also an employee of the firm, but you're the owner of the firm, there is a cap on the amount of forgiveness you can request for your payroll, and that is the average payroll over 8 weeks from your 2019 payroll records. So if you're an owner, you can't give yourself a big bonus and have it be forgiven.
Yeah. Okay, Russell?
Okay, so in addition to our healthcare insurance policy, we provide a PA on site for our employees to help offset out-of-pocket costs. Is there a way to include these costs? This is another one I haven't come across before, but I think the short answer to that is if the PA is not on your payroll, then it's not an eligible payroll cost. And then I think the question of whether it comes under benefits would be something that we'd probably have to look at the circumstances. But I'm thinking it's not what would traditionally be considered benefits, which would be health insurance and 401k and the like. So I'm not sure that the costs of that would be included as benefits. Again, I'll defer to Chris on that, though, to get his thoughts on it.
Yeah, I don't know if I have a better answer. It probably depends on the nature of the relationship with the PA. You know, they do kind of generally say that amounts paid for employee benefits are allowable, but you know, is this a PA that's a contractor that you're having brought in, or is it with a service that is, you know, a defined employee benefit? And how is that treated from an accounting standpoint in terms of your payroll expense and deductibility to employees and things like that? I think probably more guidance is going to be needed from your accountant on that, and perhaps the SBA will come out with additional guidance around that.
Okay, thanks, Chris. Here is another one. Is the FTE based on total employee hours or employee count as well? Well, this is a little bit similar to the question I answered a little while ago. When you look at employees and FTEs, there are two options to calculate FTEs. The first option is you take the number of hours worked in a week, divide it by 40, and round. That'll give you your fraction of an FTE. So if somebody's working 30 hours in a 40-hour week, they're 0.75, 20, 0.5, 10, 0.25, et cetera, et cetera. That is option number one, is the way to count FTEs. Option number two is anybody that works 40 hours or more counts as one FTE. I should mention under the other option, you cannot go above 0.1. Somebody works 60 hours, they're just one. So the second option, 40 hours or more counts as one FTE. Less than 40 hours counts as 0.5. They sort of gave this simplified option. We highly recommend you calculate using both options to determine which is most advantageous for your business.
With the proviso that once you choose a method, you have to choose it for all the periods. You can't pick and choose the method between periods.
That's correct, yep. Okay, Russell?
Okay, to be clear, so the question is, if I'm interpreting it correctly, is fuel part of the transportation forgivable expense? I think, Chris, you referenced that in the...
The answer is we think so.
Right. It's not,
they list it as a utility, transportation as a utility. I sat in on a webinar with the SBA office in Houston. I also have sat in on several with accounting firms, and the general interpretation is that fuel is what they're referring to when they're referring to transportation as a utility. Everybody agreed it's not tolls, it's not your car allowance, but it is, but it could be fuel. The SBA hasn't really cleared it up any more than that, but the general thinking is that's what it's for, fuel for company-owned vehicles.
Okay, so here's another one. With the paid or incurred language surrounding payroll that can be included, do you interpret this to allow for forgiveness of more than 8 weeks of payroll? For example, if the loan funds on April 15th and the employer has a normal pay date of April 16th on a 1-week lag, will the employer be able to include all of that payroll as well as all of the paid or earned payrolls through the end of the 8-week period? Yes, our current interpretation is that you will be able to include that. That first payroll on the 16th, that falls into the paid category, even though the incurred was prior to the beginning of your covered period. Then under incurred, you're allowed to pick up the full 8-week period as long as it is paid before the next regularly scheduled payroll after the end of your covered period. I will note too that this also applies for things like utilities. So say you get your utility bill on the 16th of April, but it's actually covering March, and you pay it on the 16th. Is that covered? Yes, that's covered. It was paid. Then you get your next one, so your covered period, April 16th, May, June. You get your June one up to about the 10th of June, whatever your covered period is. You can also include that incurred part for the number of days that you have in June. So again, you are in these expenses using this paid and or incurred language, picking up more than what the actual expense was in the 8-week period.
So I would just add one caveat to that, though, in that it doesn't apply where for monthly pay periods. So if you're loan funded on the 1st of the month and you paid your previous month's payroll on the 1st of the month, you can't then claim that and the next 2 monthly payrolls for a total of 3 months of payroll. So my understanding is it applies to weekly and or bi-weekly pay periods only.
Okay, that's correct. The alternate covered period applies to bi-weekly and weekly payrolls. Two slightly separate things there. So if you are on a bi-weekly payroll or on a weekly payroll, you can define your covered period beginning with the first day of your next payroll period following disbursement. And then you do 56 days from that date. Okay, Russell, you want to take the next question?
Okay. Actually, I'm going to punt to Chris on that one because it was covered in the presentation. Can you please elaborate on the measurement periods, particularly for the base? What interval options are available?
So you have 2 choices for covered period, 8 weeks starting with the day of disbursement or 8 weeks starting with the start of your payroll period immediately following disbursement. And then depending on the calculation, you use different reference periods or look back periods. For FTEs, the days that are important are the February 15th date, the June 30th date, of course, if you're trying to do the safe harbor, and the period January 1st through February 29th, 2020. And then I'm just going to refer to my notes because there are a lot of periods. I want to be sure I get the right answer to you. And then for the salary wage reduction, you look at the period between January 1st and March 31st, 2020. So 2 slightly different ways of looking at it. And if you also have the option with the FTE of choosing a period in 2019, which I think is February 15th from June 30th. In all these cases, you're looking at the average values. It can be a little confusing, and if you're a seasonal employer, there's a 3rd option still, but the primary ones are the first quarter of 2020 and the first 2 months of 2020.
Okay, awesome. Let's see, here's another payroll one. For payroll, do we use the time incurred on the front end as well? For example, payroll is twice monthly and P1 is from 4/1 to 4/15. PPP proceeds were received on 4/15. Can we use the whole amount or just one workday? So this gets to payroll costs incurred and payroll costs paid. If you paid them on April 16th, but they were incurred 4/1 to 4/15, you're loan funded on the 15th, you paid on the 16th, yes, you can include that because it meets the paid requirements. And you only have to meet the one requirement, in this case, the paid.
Okay, next question. I missed the part of the unforgiven loan amount and how it is to be used. Are we still restricted in the use of funds that have not been used yet? For example, out of a $148,000 loan, I calculated 31,000 not forgiven. Am I restricted in how the remaining portion is used? Not laying anyone off, and we'll keep the doors open for business. So the short answer to the question is yes. For the amount of the PPP loan that is not forgiven, the balance converts to a loan. However, you are still restricted in the use of proceeds. So the balance must be used for the specified purposes under the PPP program, i.e. Payroll-related expenses and the other eligible expenses. So no going out and buying a new BMW.
Okay. So let's see, we pay our Texas workers' comp payments on a monthly basis based on payroll. Yes, to the degree your Texas workers' comp has been incurred and or paid, it would be a qualified expense.
Okay, if we have temporary employees, i.e. summer interns in our calculation for the loan total, can we rehire those temporary employees now and use them in the FTE calculation? I think the short answer to the question is yes, but I'd also point out that it's that your total FTE calculation is based on a company aggregate, so it's not measured at the employee level. So you don't have to hire or rehire specific people. You just need to be cognizant of what your total FTE count is.
Yep.
Yep, I agree with that.
Okay, let's see, does VoIP phones like Ring Central count as phones under utilities? Well, again, this goes into one of those areas where we don't have a lot of clarity. We have, utilities is defined as telephone, gas, electric, transportation, and internet access. We don't have a definition of telephone as to whether that includes VoIP access phones or it includes cell phones. What we recommend is there's a couple of courses we recommend. As you come up with things like that, write them down on a spreadsheet. Anything that you have a question about. There's one thing that we know about this process, and that's the only thing consistent about it, is that it changes. And it changes. For a while, it was changing every couple of days. Keep an eye on the guidance because we fully expect more clarity, more Q&As to address some of these questions. So as you come across like that, don't try to say, okay, we don't know, I'm not going to include it. Use your spreadsheet where you're tracking everything and put it down as an unknown so you have. The other thing that's important in these items is communicate with your lender because your lender's going to be working with you on forgiveness. Get your lender's interpretation. Okay, Russell?
Okay, do you anticipate that health and retirement benefits for C Corporation shareholders to be excluded from forgiveness like partners benefits have been clearly identified as being excluded? So
I can provide my opinion on that.
Yeah.
So they do say that owner employees, for instance, are in payroll are treated separately than employees. The problem is they don't define what an owner employee is. I would think that if you, for instance, have a stock program to retain employees and they are C Corp shareholders because of that, it doesn't seem reasonable that their benefits would be excluded. They have not provided specific guidance around it. I suspect that, I hope that they will issue some sort of threshold where you're either, greater than 20% or a majority owner of the company to be treated as a partner. But probably realistically, if the employee is not, in fact, if they're not the owner of the company, if they're not the ones who have the ability to make the kinds of decisions that an owner would normally make, then it's probably safe to include it. But again, additional guidance will probably be needed to sort that out.
Okay, thanks, Chris. Okay, here's another one. Is my fax, copier machine, telephone equipment lease excused on the 25%? Yes, those are rental or lease payments, and those rental or lease payments can be included on the non-payroll costs. Russell or Chris?
Okay. How would you calculate the annual bonus that are in the totals in the prior year 941 report to be part of the 8 weeks payroll? So I'm trying to understand the question here. I think it's when we were talking about bonuses before, we mentioned that, and I think this is perhaps in relation to owner compensation prior years, where you would take the average compensation for 2019 as the base. Do you have anybody have any further insight on that?
Well, yeah, I think, what you pay during the 8 weeks is the total compensation that you can use to ask for forgiveness. There is a restriction if, owners are paid, they can't be paid more than the average of 2019. There's also a test of whether or not an employee is subject to the reduction that involves 2019 payrolls. We didn't go into that in the talk, but unless we may be misunderstanding the question, and if we are, be sure to follow up afterwards with an email and we can provide a more detailed answer. But it shouldn't affect the 8 week calculation, but we'll need to know more specifics about the situation.
Okay.
Okay. Go ahead, Russell.
Next question. You said to use average of 2019 salary for owners for forgiveness request. Is that even if above $100,000? So I think the point to note here is that everything is capped at $100,000. And so in terms of the original reference period, employees who are making more than 100,000, the cap, you included them at 100,000 in calculating your eligibility for the loan. And now, likewise, in terms of calculating eligibility for loan forgiveness, that same $100,000 cap would apply. There is some nuance around how to calculate if somebody is earning above $100,000. But I see that we're coming up on 3 o'clock, so I promised that I'd have you all out of here. So do you want to maybe just cover that, Chris, and then for those who haven't had their questions answered yet, we can maybe just copy them down and then make answers available off of our website or via an email to the participants on this call.
Yeah, I think I'd only say that you know, if the owners made more than 100,000 in 2019, then they're capped at the 15,300, was it 58 for the 8-week period. So in that case, they can claim maximum forgiveness. The nuance Russell was referring to has to do with determining if an employee needs to be tested for the 25% reduction, and we can address that in the follow-up because it's somewhat lengthy.
Right.
Yes. like a lot of these calculations, it's quite in-depth and lengthy.
So I see Kirk is back.
Right.
Yeah, hello. Figure we're coming up on 3 o'clock. So I would just assume we let everybody off the hook at this point. We don't want to keep everybody much later than this. I'm just blown away with the quality of the questions we've received and the level of expertise you guys brought to this. It's incredibly informative for me. Thanks all of you for attending. Thanks to the vcfo team for doing this for us and with us. Any questions that any of you have out there in the audience, just please get those to your contact at Shepard and Walton. And we are happy to facilitate further conversations, if as simple as just an answer to even more conversation with any of the folks over at vcfo. We want to make sure you guys feel confident and taken care of. And with that, I think I'm just going to leave it at that. We again appreciate all of everyone's time. Thanks so much for all of this.
Thank you very much.
Thank you, everybody.
Thanks, guys.